Good afternoon, everyone, and welcome to this week's Coffee and Chats webinar series. My name is Richard Kalordi, the Marketing Manager for HLB Manjard, and the topic today is called the Road to Recovery, which will be focused on businesses who are starting to return back to work as lockdown and social distancing restrictions start to ease. Joining me this afternoon are HLB Manjard partner Litsa Christodulou and HLB Manjard Director Rowan Tracey. Litsa and Rowan, thank you very much for your time.
Thank you, Richard.
Thanks, Richard.
Litsa, I wanted to ask you first, a lot of businesses are returning to the office. What are some of the important considerations for those businesses?
Well, Richard, everyone's talking about the new normal that we have to get used to. And I think one of the things that I think is the most important is that our communication needs to be transparent with the staff and other key stakeholders that we deal with in business on a day-to-day basis to allow everyone to feel part of the decision-making process. So I think you also need to remember that it's not just your staff, it's also that you need to boost the communication with, it's also your customers, because a lot of the time they will know that you're mostly working from home. So they also need to know when you're returning to work. So some of the things that I think that you probably need to consider before employees start heading back to work is, firstly, let's look at the comfort level of how the staff feel about coming back to work, especially those who have commuted via public transport. They might not feel comfortable doing this. You know, do you have a documented return to work plan that's available for all your staff and customers to have a look at so they know exactly where they stand? How many people can return to the workplace under the current phase of the state government's return to work guidelines? You know, this is also important because, again, you don't want to breach those. Will you get your staff coming in all at once, or will it be in a stage process? Will you set a date when all staff are due to return from work, or will you just wait for further guidance from the government? What action do you need to take if the staff refuse to come back to work? You know, for example, do you need to get specialist HR advice if you don't have a HR manager on standby? What about flexible working hours? Flexible working hours from home, I should say. There's been a number of articles recently around people being more productive when working from home. So is this something that businesses should consider? Now, physical distancing. How will you ensure the appropriate physical distancing measures are being adhered to? Who's going to be looking after this to ensure that everyone's doing the right thing? Will you have a nominated person? Hand sanitizer. Do you think you need hand sanitizer stations situated around the office? If so, do you need to source some before setting a return date? Are you going to be testing people's temperature as they come in? So therefore, do you need to consider one entry and exit point in order to be able to do this? I mean, Richard, this is not an exhaustive list. It's just something that I think the main points that need to be considered in terms of getting people back to work safely.
Thanks, Litsa. Rowan, both operationally and strategically, what are some of the important considerations for businesses?
Yeah, thanks, Richard. Look, I think we're all surprised and somewhat taken back with how rapidly the COVID-19 situation escalated in such a short period of time. Look, initially it was a real test of character, I think, resilience and flexibility of the business. And in times like those, survival mode often comes to the forefront. We all know that some businesses had their hands forced and had to shut their doors, stand down staff, only to be told within the month or so they had to re-engage, pay them $1,500 a fortnight to receive JobKeeper payments. I can only imagine the kind of pressures and stresses that placed on business owners, particularly small business owners. What we've seen at HLB is the level of disruption vary greatly depending on the industry in which the businesses are operating. Obviously, retailers and hospitality service providers have been hit hardest initially, but we have also noticed significant impact on business operating in the medical industry, printing industry, financial services industry, and the building construction industry, just to name a few. For those businesses that have remained operational, there were lots of very important business decisions that needed to be made very quickly, mostly around staffing levels and working from home arrangements and the logistics around that. Look, as we start to look forward to the new normal, for businesses, I think it's obvious that cost management and cash flow, they just have to be front of mind. So look, operationally, I think of obvious critical importance is now more than ever businesses need to be attuned and focus on their financial framework, such as the budgeting, cash flows, forecasting, as well as implementing cost strategies wherever they can. In my view, businesses give themselves the best chance of survival and difficult trading conditions when they clearly understand their products and services, focus on doing what they do well, look for areas for improvement and address inefficiencies and wastage, embrace their people and technology, and also have solid financial reporting foundations such as rolling budgets, forecasting, scenario modelling, and what ifs, and really closely monitoring budget to actual performance. Sometimes, although it may seem onerous on a daily basis. Being nimble and able to adapt quickly to changing trading conditions is also very important. I think to be able to do this, you need open and regular communication between your finance team, your senior management, and the other key senior people or decision makers in your business. I guess there's no point in someone in the finance team, for example, being aware of cost blowouts on certain products or service lines if it isn't communicated in a timely manner to someone at the coalface who can actually make a decision to deal with that. And as I mentioned earlier, I think technology plays a fairly key role in providing greater amounts of real-time data and allowing those key decision makers to make sort of operationally timely decisions as well. Strategically, I see it as an internal and external focus. So internally, revisit your business and strategic plans. Do these need updating? And are they appropriate for the business in the short, medium, and longer term? When was the last time you actually looked at your business plan? Do you even have one? Is now time to turn your mind to the strategic direction your business is heading in? Critically review your products and service lines. Review your core business offerings and strengthen or build on your current revenue streams. Look at aspects of your business that aren't quite as profitable as you might like them or not performing quite as well, and consider whether you'll continue with these goods or services. Is it a good time to diversify new products and services, or is that too much of a risk in your industry at the moment? Whether now is the right time to diversify will be dependent on any number of factors impacting your business and sector. Focus on your business process improvement and efficiencies. Look at how your business is operating. Are there areas that could be improved via re-engineering or streamlined and simplified, using new technologies? Externally, how have your competitors been impacted by the disruption? Is there an opportunity to increase market share by business merger or acquisition? With historically low interest rates and some businesses really struggling, perhaps you could buy assets or entities at a relatively cheap or discounted price to strengthen or complement your current business offering. Acquisitions aren't for everyone, might not be a viable proposition. Perhaps considering joint ventures or partnerships or with other businesses to generate more opportunities and cost share. But what does that actually look like for your business, and how do you protect your own interests? I know those arrangements can be very complex. And finally, do you need to bring in another investor into the business for a cash flow injection or a working capital injection? Once again, what will this cost you? And what do you stand to lose, whether it be control, decision-making, influence, or the impact on the overall culture? So look, I think that's a couple of key points to look at both operationally and strategically post-COVID-19, Richard.
Mm-hmm. Thanks, Rowan. Litsa, this has obviously been quite a difficult time for many business owners. What do you see as some of the hardest decisions that business owners have had to make?
I guess, Richard, beyond keeping your actual doors open and remaining in business, probably one of the biggest and hardest decisions relates to staff resourcing and trying to get the right staffing levels for the budgeted numbers that you're projecting out. As we all know, salary and wages would be the biggest overheads in any business, and JobKeeper was a welcome wage subsidy for eligible business. However, this won't last forever, and once it's in, you could end up with the business not being able to afford to keep all their staff that you haven't made redundant. We know a lot of small and medium businesses are like a big family, and standing down or terminating the employment of someone, in some cases that have been long-standing employees, is extremely difficult. The reality, however, is that a lot of businesses will need to ask some serious questions around staff resourcing. So I guess it comes down to processes. Can we put processes in place to make our business more efficient with less people? Many businesses use IT systems that could be potentially years old. Many businesses operate under the premise, if it's not broken, don't fix it. This is very old-fashioned in my view, and really processes need to be looked at regularly. IT systems are constantly changing over time, and something that suited a business many years ago may not be efficient and effective under today's standard. It could also mean that technology could improve the process, and therefore businesses save money in the long run, especially if people have made people redundant under COVID-19 already, and then their business starts to crank up again. Another question is, are you using your people to the benefit of the business? You know, are we utilising their particular skill set? You know, how quickly and easily can we reduce or increase our workforce with minimum impact on the business? Do you employ casuals instead of permanent part-times to take up those extra hours as needed? If we do need to make people redundant, how much is this going to cost the business in the short term? Do we have to look at industrial awards and EBAs to ensure that we consider to ensure that we can make people redundant, and how we make people redundant? Again, as I said previously, that might need specialist HR advice if you haven't got a HR manager. And I guess the most important thing in terms of staffing too is, if you're making all these changes, especially making redundancies, I think you've got to ensure that you know that this is going to change your staff morale and could effectively affect the productivity of remaining staff, especially when people have lost their friends. So these are just some of the things that I think are important around the largest overhead of a business.
Litsa, just to expand on those points, what's your advice for businesses that are experiencing cash flow pressures, and where does banking fit into that?
I think, Richard, we've got to get back to the basics with this one. As Rowan said, in the current environment, a business needs to be more nimble and adaptable to change very quickly. The owners need to look at things with a fresh pair of eyes. You know, now more than ever, cash flow modelling and profitability budgets should become a critical part of determining how a business is run. You might ask me the question as to why you need both. I think the answer is quite simple. You can make a profit, but you might be struggling from a cash flow point of view, basically because you're buying or producing the goods up front before receiving a payment from the customer. And sometimes this lag could be up to 30 to 90 days, sometimes even longer. So you've got to be wary of your cash flow. Most large businesses have accountants who would be familiar with both modelling tools. Perhaps previously there was some complacency around cash flow problems because they didn't exist. But now COVID has changed the landscape significantly, I think. There have been businesses operating with positive cash flow for many years and positive profit as well. But, you know, simple issues like shutting down the borders might have changed that. So financial modelling for larger businesses, but performance against budgets, we need to do that constantly. To me, this should be done probably weekly, just so we can be ahead of the curve. Small to medium businesses might not even have these tools, but I think they're imperative, and you know, we need to have these in terms of quick decision making. A once wise person, I'm not sure whether it was accountant, saying cash flow is king. I think there's nothing more important at this stage. In terms of banking, I guess some of the questions that I would ask a client is, when was the last time you spoke to your bank manager? The reason I ask this, I guess, is it's a very important question, because most bank managers have large portfolios of clients, and really they can't afford to spend a lot of time being proactive with clients. So they're not going to go look at whether your merchant charges are at the appropriate level. So, you know, merchant charges could be slowly crept up because you haven't looked at them for years. When was the last time you discussed your overdraft limit or your interest rates with the bank? Can you extend your overdraft or your credit facility? And what additional security might the bank want, and what are you willing to give up? When are your debt facilities due for renewal? Could you renegotiate your debt, delay repayments, reduce the interest rate to assist your cash flow? You know, it could be that you need someone to review your financing arrangements to see if you can reduce or consolidate your debt into cheaper funding. Overdraft is a very expensive form of funding these days. Is it the best way of getting additional funds into the business? This could mean that paying a mortgage broker or a specialist equipment broker, you have to pay them now, but it might save you money in the long run. What about those clients who are importers and exporters and those dealing with foreign currencies? Maybe you need to reach out to a foreign exchange specialist to look at your options and hopefully reduce your business's forex exposure. And finally, I think in terms of banking, we all know that the banks have the ability to defer principal and interest repayments for 6 months, but you've got to remember that interest is being capitalised and paid over the life of the loan. So this could cause other issues in the long run. So that's basically cash flow and banking. But the other main cash flow is dear to my heart because it's debtor management and collections. Again, now more than ever, it's important to be realistic about debtors. Look at your aged debtors. Anything over and above 90 days, are you likely to recover them? Have you done everything in your power to collect this debt? If so, is it time to write it off? This will give you a much better picture on what your balance sheet looks like and could potentially trigger you to ask yourself some serious questions about your business's financial health. Let's also face it, we have those customers that don't pay in accordance with their credit terms. So with those sort of people, maybe you need to factor in when you're billing them some sort of additional component to the bill so that covers the fact that they don't pay on time. You should use also simple analytical tools like aged debtor days just to see how you're going in terms of your debtors. Because again, if you compare period to period, you might be able to see a pattern on how slow your debtors have become over a period of time and what you need to do to get them moving again. Now, a caution with this, because obviously while you want to convert your debtors into cash, you need to also take into account the fact that your clients might be under significant pressure themselves financially. And you've got to be careful where you've got some long-standing clients that you're not actually getting them into more trouble. So communication is key here. Some of the other strategies that I think you should look at is looking at your debt collection process and procedures. And are they being strictly adhered to? Do they need to be revisited? There could be that you might not have a policy in place at the moment where if you don't get paid, you don't begin the work until you get paid. Asking for upfront payment based on a percentage of total fee. Again, you might not be able to do this with your current customers, but it might be particularly important for your new customers. And as Rowan said, I think he alluded to making low or no interest payment plans at the time of the invoice. So that could be another thing that helps out at your clients as well, especially if they're loyal. And finally, I don't know whether a lot of small to medium businesses do this, but background checks and credit checks might become more important, especially where you've got one particular large client who you've got a lot of financial exposure against. So, Richard, they're just some of the things that I'd be looking at to work with a client to help them out over this tough period.
Mm-hmm. Rowan, Litsa spoke quite in depth about the financing and banking solutions to cash flow. What are some of the other things that you think are important for businesses looking to improve their cash flow?
Yeah, thanks, Richard. Look, without trying to oversimplify things or suggest there's a one-size-fits-all approach, there are several other aspects of businesses that can be reviewed and strategies implemented to try and assist with the cash flow. Why not look at your trading stock? Look at the stock turnover days for each line item and how long it takes to sell the stock and turn into cash. Should you be modifying your purchasing habits? Identify latent or obsolete stock consider fire sales of these stock items, at least convert them into cash, even though they might not provide you with the margins that you were hoping for. Speaking of margins, review your contribution margins and sales volumes on particular stock items and consider whether they will continue to be offered or sold in your business. Are there alternative suppliers out there that can provide businesses with its trading stock needs at a better rate or a better price? And if you are happy with your current suppliers, can you renegotiate some of your supplier arrangements and payment terms? Are suppliers willing to provide you with your stock on consignment, for example, which can have fairly significant cash flow benefits? What about your invoicing and your billing processes? Review your contracts and customer arrangements to determine if you can increase your billing cycle. Some clients or customers may prefer ongoing monthly payment arrangement, which can assist in the cash flow not only of your business but from the customer's point of view. Mm-hmm. Have a look at your fixed asset register. I mean, when's the last time when you looked at it? I mean, are there assets with value in there that could perhaps be refinanced, sold for cash, and then replaced via debt funding under sort of a sell and lease back arrangement? Or do you have excess capacity in some of your fixed assets where you could lease it for the short term to generate some cash flows? If you do need some new fixed assets to generate some more business income, debt funding in times of historically low interest rates is a very attractive option. That also goes hand in hand with some potential future tax savings that you could take advantage of due to the sort of fairly well publicised increase in the instant asset write-off threshold and other investment incentives. And finally, sort of goes without saying, just review your overheads and your direct costs. See where there's some short-term cost-saving measures that could be implemented. Just a couple of examples here. Look at your staff salaries and your remuneration arrangements. Perhaps pay freezes are needed. Perhaps the owners need to look at how much they're actually drawing from the business just to assist with the working capital needs in the short term. We all know due to COVID-19, there's been a lot of restrictions placed on the amount of contact in the office and things like staff amenities, tea, coffees, biscuits, sandwiches, breakfasts, whatever your business is providing to your staff members. By not purchasing those or such quantity or volumes of those can have a significant saving for businesses. I'd suggest that you cut back on the non-essentials like your entertainment, your promotional, your event-based expenditure where reasonable. Why not review your insurance policies? Engage with your insurance brokers, explore better deals, see whether you're over-insured, whether there can be some short-term cost savings there. Speak to your landlords, try and get rent reductions or rent deferrals. Has working from home made you rethink the need to have such a large footprint or a business or office premises? Is working remotely something that you're going to be offering or encouraging your staff to look at in the future? And what cost savings from a rent perspective could you look at pursuing? Mm-hmm. At the departmental level, depending on the size of your organisation, look at the budgets and consider whether or not they need to be reduced. For example, travel expenditure with border restrictions both domestically and internationally. It's probably unlikely the quantum of travel is going to be what you anticipated. And finally, another strategy is to perhaps just discourage non-essential asset purchases unless it's absolutely required for example, computer equipment, office equipment, partitions, etc. Around the office. They're just a couple of seemingly simple cost-saving measures that could potentially be implemented by most businesses, I'd suggest.
Mm-hmm. Rowan, I just want to ask you my final question. There's been quite a number of government-based initiatives for businesses, and Litsa did talk a little bit about JobKeeper, and everyone is aware of JobKeeper. Mm-hmm. But in your mind and what you're aware of, could you expand a little bit about the other WA state-based government initiatives available to businesses?
Yeah, sure. We all know the federal government stimulus has been fairly well publicised, but there are WA state government packages which are targeting both industries such as tourism, mining, building, construction, and there's also economy-wide state government stimuluses which are in place. The targeted industry packages range from sort of your one-off cash grants and funding programs financial support and assistance regarding marketing campaigns, and also to administer occupational health and safety programs such as COVID-19 testing for mine sites, for example. With all the targeted industry packages, there is an application and an assessment process. So if you are looking to perhaps take advantage of those, I'd suggest that you firstly go to the Office of State Revenue or the WA State Government website and have a look at that and get an understanding of the application process and the criteria there. More broadly, probably the payroll tax. There are some other measures that's an area of focus and applicable to a lot of our clients, I'd suggest. A range of measures, the firstly being the one-off grant, which is, I sort of call it the payroll tax equivalent to the ATO's cash flow boost. It's $7,500 for business with Australia-wide wages of between 1 and 4 million that was reported in their 30 June 2019 annual payroll tax return. Similar to the ATO or federal government's cash flow boost, there's no application process. And eligibility will be assessed by the WA Office of State Revenue with refund checks issued in July 2020, apparently, for the eligible recipients. Even though there's no application process, I would still encourage all our clients that feel as though they would be eligible for that to go onto their Revenue Online account and make sure their business's addresses are updated, because as archaic as it sounds, they will be sending checks in the mail. So it's important that that's getting sent to the right address. I'm not sure whether everyone's aware, but there's a payroll tax waiver currently in place between March and June 2020. That's for employers or groups of employers whose Australian taxable wages are less than 7.5 million for the year ended 30 June 20. It's important to note that where your Australian taxable wages were 5 million or more at 29 February 2020, or you're a new registrant for payroll tax from 1 March 20, that you need to apply for the waiver via an online application, and you'll be expected to provide some calculations or evidence as to why you expect your Australian annual taxable wages to be less than 7.5 million. Let's say that you are successful and you're approved, and your actual wages do end up being more than the 7.5 million, at June 2020. You will unfortunately be required to pay the payroll tax from March to June 20, but you'll be given till the 21st of July without incurring interest or any penalties there. So you effectively get a payment deferral in that case. Regardless, if you think you're eligible for it, I would be encouraging all our employer clients to maintain their records as at the 29th of February 2020 to demonstrate their entitlement to the claim, just in case WA Office of State Revenue asks the question. We all know that JobKeeper has been fairly well publicised, and I won't go into detail. We've had a separate session on that. But just as a reminder, wages subsidised by the JobKeeper program are exempt from payroll tax. But it is important to know that it's only the subsidised amount, or the $1,500 per fortnight. That's the only exempt component. Anything above and beyond that, so for example, additional ordinary wages that are paid to employees, they're still taxable from a payroll tax perspective. And the final matter relating to payroll tax, which, although it's not an immediate cash saving, the government's brought forward the payroll tax increase in the threshold to $1 million from 1 July 20. So that can offer some payroll tax savings and/or have some people actually removed out of the system a little bit earlier than anticipated. And finally, being conscious of time here, just that there is some general financial support for small and medium businesses, up to $2,500 worth of electricity credits for small businesses. We have seen some of them coming through on our clients' bills. On the electricity theme, the state government has directed Synergy and the like not to disconnect anyone if they don't pay their bills up to the 30th September 2020. There's also some waiving of some annual license fees and charges renewals. The business industry, in the hospitality, tourism, retail and building construction industry, and also the liquor licensing annual renew fees. Finally, the the Office of State Revenue are being, in their words, fairly generous when it comes to payment arrangements. So if you are having difficulty paying payroll taxes, transfer duties, landholder duties, vehicle duties, or land tax, I would encourage you to reach out to the Office of State Revenue, because they do have low and no interest payment plans at the moment, because I understand businesses are struggling. And I just thought I'd wrap up with, although it's not specifically a state-based issue, the same applies with the ATO. They've already granted a number of lodgement and payment extensions, but I'd also encourage businesses that are struggling with their federal tax debts to reach out to the ATO and request assistance from a payment arrangement perspective, because they too have got low and no interest repayment plans. But in both the state and federal cases, it is on a case-by-case basis. It's not an automatic grant. You will need to reach out and engage with them to be able to avail yourself of those.
Great. Litsa and Rowan, thank you very much for your time this afternoon. That brings the webinar to a close. You've definitely provided quite a number of valid points and considerations for businesses who are on the road to recovery. For our audience members, if you would like some further information, or if you would like to get in touch with Litsa and Rowan directly, you can email hlb@hlbwa.com.au. Thank you everyone for your time this afternoon. Litsa and Rowan, once again, thank you very much.
Thank you, Richard.
Thanks, Richard.